All right, folks, with me now, Main Street Asset Management CFO Aaron Gibbs. And Aaron, a couple of weeks ago, you said the economy was nowhere close to a crisis. You still feel that way?
Yeah, I think when looking at from
Now,
an
you
employment
speaking for
standpoint,
rich folks or for everybody?
no, absolutely for everybody. Trust me, the wealthy are hurting. When the market's down 20%, a lot of people are
Those
hurting.
martinis don't taste the same. Yeah.
Exactly. No, I think it's really when we're talking about employment, we've still got so much room on the employment, and even with some of the recent, lack of hiring, cutting back, those are still the early stages of coming towards a recession. So I think there's some hope on the inflation side when we're looking at future commodities, oil, cotton. There's some really interesting trends when you look at the future contracts. Cotton and oil, two of the biggest ones, 9 months ahead, they're trading at a 40% discount, which is very unusual. So that's a positive,
right.
that these prices could come down. And so, yes, we may get into recession. We may see.
Is it somewhat ironic that some are saying that some of these commodity prices are coming down because of talk of recession? It's, maybe it becomes self-fulfilling to a degree?
Possibly. I mean, it's also a strong dollar, which helps some of that. So there are a lot of things. But the fact that it's a 40% decline in 9 months is huge. Yeah. And that's something that I'm saying it should be noted.
How are you feeling about this July move so far? Are you impressed?
I would still call it probably a bear market rally.
Okay.
I mean, I have been taking my picks. You and I, we talked about it. There are just some stocks that are so, beaten down that they've been great winners. And so I've been, riding the wave for the past couple of weeks.
I know the last time you were here, you had Front Door.
Yeah.
That's done extraordinarily well.
Yeah. So about up 20% off its lows. I got lucky getting close. So that's one of my picks. I think there are some winners now that as much as your previous guests were saying, a lot of the bad news has been priced in, and so there are very select opportunities out there.
What's the message of the bond market, particularly this 10-year yield? I mean, now I think it got hit a little bit today on maybe some earnings, maybe that Bloomberg report on the Powell pivot, but even yesterday it made a big reversal. It was up in the beginning and then it came down. Is it telling us something about the economy? Is something about the market? Does it make you more bullish about equities?
I think what it's really telling me is more, it's such a sentiment indicator when it comes to the 10-year in particular is really about sentiment. And so I think it's really seeing that there's a lot of fear out there, that people are really worried about recession, and the volatility that we're seeing is just sort of this, not really knowing where we're going. Is the Fed going to get us a soft landing type of thing? So when I look at the 10-year that's inflation adjusted to the tips, the treasury, hasn't been as much volatility. Okay. So I think it's really all about sentiment.
I got 30 seconds. It's some of it, though, just to underscore that with all the turmoil around the world, we're still the best place if you want to park your money, America.
Yeah, I think growth. We are the safest place when it comes to sort of risk rewards, and then with valuations getting lower, there are more opportunities.
All right, but you're not going to give me any new ideas. You're going to ride the wave with the Front Door.
Ride the wave with the Front Door today. I'll give you a new one next week.
Okay, have a fantastic weekend. Thanks a lot, Aaron.